Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical, no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial.
All right, Amanda.
Good morning.
Lead us. Happy
birthday to Debbie. Happy birthday, Debbie.
Wherever you are.
You are being a gift today as a daughter. You're rocking it, and I'm sure it's not the way you wished you were spending your birthday, but it's the right thing to do. And we love and miss you.
Well, we
Hello.
did.
I should have said good morning, Doug, Keith, and Mr. Stonks.
Good morning.
Is that how he talks? I don't even know how he sounds.
I really like this idea. So which kid got you this?
Caleb.
Caleb bought Keith, Mr. Stonks. And Mr. Stonks is a play on stocks. And Mr. Stonks, I just think he's super cool. And one of the greatest things about kids, I was reminded of this from a friend who came to visit this week, is all the great memes that you get from having kids in your household. So if you have kids who have an iPhone, you know, and you get to experience the world of memes, and Mr. Stonks is one of those. Pretty cool.
I'm gonna throw back to Whitney Houston. The children are our future. You know that song.
I believe
yeah. You get a lot of singing today, but yeah, it's hard to be a pessimist when you have children that have creative minds, and you know there's just millions. Probably are there billions? I don't know if there's billions of children. I don't know how the 8 billion would be spread, but there's a lot of children out there that are creative, wondering. They are wandering.
Maybe.
Maybe.
I wandered a bit. So, but to know that there's really cool things in the future it's a reason to smile every day, I think.
Yeah. And I think we ended the call last week with this, that younger generations they're optimistic because they want a future. They want a house, a spouse, a new car, a faster car. They are just optimistic in general about going for it. Whereas some of us who've had success or built up the barn or built up your 401k or your IRA, we're afraid of losing it. Whereas, the children are the future. They're the ones thinking about stuff like, I bet I could sell this and make a whole bunch of money. I mean, this was somebody's idea. I kind of look at this thing like Gumby, but Mr. Stonks. Somebody has a cool new boat because they came up with Mr. Stonks.
I still like my old generation. They you know what they came up with? A pet rock. They didn't even have to mold it. They just put rocks in a box and sold them as pet rocks. That's somebody sitting on an island. You may have to Google who invented the pet rock, but he had to make a ton of money on.
I remember that. And I'm gonna have to Google it because I want to know what the packaging looked like.
I think it's all in
the packaging.
Yeah.
I got to credit you guys. I actually got a message yesterday that someone thought the new Facebook post was my idea. So you're thinking young, and you get credit for it. So,
I
great
think
job.
that was a backhanded compliment.
I don't know.
I'm
not
saying,
sure what that
that's
was.
what I heard.
You can be optimistic at any age. That's all I'm trying to say. You think young, if we're talking about the youngsters, I have to get credit for you.
Who's an engineer-minded guy. He likes to remind me just to have fun with what you're doing. And I think if you can have fun with what you're doing, you can be a little more optimistic, or you can dream a little beyond your means if you're having fun with what you're doing. And so that's what Mr. Stonks was about on the Facebook yesterday. It's just we're having fun with what we're doing.
Well, Amanda, anything we need to address before we jump into some market ideas?
I had a hypothetical question that I just wanted to put out there. If you guys were to just hypothetically be moving bank accounts, what would you want to know before you moved? Not that's a not just directly to you, but if our clients out there watch this, if you guys could be thinking of what would you want to know before you moved your bank account, we'd like to know.
That's a great question. It's a question that Caroline and I have recently thought of. And I can tell you reasons not to move it. You know, it's a hassle. I've got all these payments that go here and there that are already in motion. But one reason I think to do stuff is just to shake it up and not get settled. A guy I worked for in high school, he changed careers on purpose every 10 years. He was a business owner, but he'd buy a new business every 10 years just to stay fresh. And that might be reason alone.
Yeah.
You may not know the technology that one bank has over another. One bank might have a whole bunch of brick and mortar, but their app platform might be archaic.
I recently changed my bank, and my former bank, I felt like they had violated my privacy a bit, and I don't get frustrated much, but that seemed a little peculiar to me. But I think the first thing I was looking at is convenience. I was looking at some level of service, and also, I guess, just kind of inherently in it would be some sort of guarantee against the bank being bad managers. That most, if you're NCUA or FDIC insurance, I think it's up to $250,000 per account per title, and so just making sure that's there. Back in the 80s and 90s, there were these places called thrifts, and they would offer real high interest rates, and they didn't have much security behind it. And they started selling things that weren't secure. And a lot of people in the early 90s lost maybe their life savings because they got accustomed to getting higher interest rates back in the 70s. And when interest rates started dropping into the 80s and 90s, they kept moving to things more aggressive. So those would be the things that I would look for. And if you ask me in 6 months, I'll let you know if I'm pleased with it. I gave up a little bit of the customer service on the front end for the location and convenience, that if I really need customer service, I can go to the office to get it.
Yeah.
Right on. But yeah, so if you guys could just ponder that thought, we do want to hear from our audience about what were the questions that you would ask if you were moving your bank. So that's all I have.
I think another question I'd ask our audience is if you enjoy watching these ideas that we throw out there and bantering, is it something a friend of yours might enjoy watching as well? And is it something that is worthy of passing on to other people? Because we enjoy communicating this way, and at the same time, being young-minded, we don't want to do something that isn't profitable for everybody in the long haul. So we want to make sure we keep it real, keep it active, and make it so it's useful to people.
Great work.
Well, I was sitting at the dinner table last night, and Caleb's girlfriend, Judah, asked Caleb if he's ever been to an auction before. And that was a great question, because I went to an auction last night, and I thought I would bring some examples. What was auctioned was a commodity, and this wasn't the commodity, but I was interested in it. And what this commodity, these are skipping stones here. I'm a pretty good skipper. Caleb has kind of beat me in the skipping area lately, but they're all smooth, which I think is required in a skipping stone. And then it's how one fits in your hand is, for me, kind of whether I'm going to get, I think maybe 10 or 15 skips is my record.
Come on.
What's yours?
Oh my gosh.
4.
Wow.
That's why he needs to go to the skipping stone auction, so I can get him the right stones and the right effort. So So anyway, the auction had 4 possibilities last night. It wasn't skipping stones, but it had 4 possibilities. And the way you could bid on these, where you could bid on any one of these, or any combination of these, or all of them. And what they would do is they would take the individual or the combo bids and total those up. And whichever was the highest total bid, that's what would, that's who was going to win the bid. And so I decided when I entered it, I wanted one of the 2 smaller ones is what I started bidding on. And the price per molecule on the 2 smaller ones got higher than the price per molecule on the larger ones. But if you were the highest bid on one of them, and it was a combo bid that was beating you, and you switched to bidding on the other one and you became the highest bid, then you'd be the highest bid on both of them. And I wasn't that committed to the skipping stones to say. So then, and Caleb was watching, this was an online auction. He was watching me and trying to get through the psychology of what I was thinking. But when I realized how high the price per molecule got on these, I didn't want to bid on this one anymore because it would be more efficient for me to bid on the next bigger one. And so I kept telling him, I need somebody to outbid me, so I'm not committed to this one anymore. And then all of a sudden the bid came in, and so I switched my bid. So the psychology of this guy, he thought he was bidding against me. He had no idea I wanted out. So then I started bidding on this guy, and I got the lead bid on this. And then somebody came in and was bidding on all 4 of them. And what the guy bidding all 4 of them didn't know was that I had a long ways to go before I was going to be tired bidding. And so I kept bidding, and this guy that was bidding all 4 of them, my increments were smaller because of the price of what I was doing was a smaller increment in the bid. He or she had to bid it up bigger every single time. And so the psychology of that thing was really a great training ground for Caleb to learn how to trade in the stock market.
That's the stock market.
Yeah. And what's unique about this and the stock market is there's only one way you bid this. You can only bid this up.
Right.
And if you get to this, and this is a finite auction. There is a timeline when this is over, and you don't know whether you made a good decision or not until maybe years from now on this. The commodity was land. And so the person that got it, they may or may not have got a good deal, right? And so the difference between these rocks and the stock market is it's basically open all the time. It's open 5 days a week, and you have complete liquidity, which that land didn't have, right? And so this is what I don't think most people realize is that if you missed an opportunity in the stock market, you don't have to get all antsy and jump right in there.
Right.
And so
right.
If I didn't know in that auction last night what my limit was, what I was willing to pay, I could have got emotionally sucked in. And basically when I made my last bid, I had an errand to run. I closed the computer and left. I didn't know what the deal was. I just knew I can't bid anymore. And with the stock market, what happens is there are people that want individual stocks here. And so they may be bidding on this stock. There may be like industry funds that are just bidding on these 2 stocks, right? Or there may be like an index fund that's bidding on all of these. Yeah. And the way the index funds is they actually, when they bid on the stocks, they do what they're called is weighted. And so if they've got $1 million to put in, this bigger one is going to get more weighting of that money that comes into it than this little one, even though they won them all. And so what happens is these bigger ones tend to get bigger, more expensive.
And so when you're saying index is like the S&P 500, that's probably one everybody knows, or, the Dow Jones,
right.
And you can look up and see those stocks and you can Google and see, which ones are the big ones, which one is the big one that's getting the most attention in the basket.
Yeah. And so what we know is going on in this market is this is a very narrow market. The stocks that are getting all the money right now are these big ones. They're not calling them I don't know if you knew this, they're not calling them the FANG stocks now. They're calling them the $1 trillion club.
That's interesting. I've been studying trillions this week.
There you go.
Cool.
Yeah.
They're calling them what now?
The $1 trillion club.
Okay, I haven't heard that.
Yeah.
But, okay, so it's no longer FANG, it's $1 trillion.
Well, the young people probably are already calling $1 trillion. Old guys like me, I'm still kind of getting my brain around the off the FANG.
Okay, that's cool. That's news to me.
Yeah, and so the challenge in a narrow market like we have right now is that some indices like the S&P, because people are pouring more and more money in these stocks, it's pulling the value of those indices up because more money is going into those big stocks. And and at some point, trees don't grow to the sky. At some time, these $1 trillion ones are going to quit getting extra money. And stock selection in those smaller ones are going to make sense.
Yeah, these smaller ones. So it might be the back half or back 70% of an index. I think you may have heard of those names, but they're just not headline names anymore. But they're still great businesses.
Yeah. So when I look at our clients' accounts, I get a chart on my screen. This really shows a lot. This part over here shows what's been going on in 2021 over here. We had a little bit of run up here, and then it just kind of doesn't seem like a lot of progress is going on. And I think that's because that's the bias our accounts have. If you compare that, this is the Russell 2000 index, which is going to be probably more mid-size of these stocks than these big ones. We do have some exposure though in the S&P 500. But if you look at those two indices, you can see that that this one has a different shape to it. And because we've made decisions, when Amanda was going over the disclaimer a while ago, what I really like is most broker dealers these days don't have opinions very much.
Right.
And it says the opinions of Gimbal Financial are not those of LPL. What I want to tell you is we have an opinion, and that's a big deal when you're trying to make investment decisions. And so where our opinion has been biased this year is that we have a weighting in our portfolios of this sort of thing, but we also have this weighting, which tends to round it out. And if you're thinking of the auction yesterday and how I was strategizing in the auction, when I switched over my bid, when you look at this the Russell 2000 here, it's trending upward based on this black line here. This black line shows you the last 200 days average price of this index. And that line is going in the direction I think you all want your accounts to go. What it's done though, is this period right here has been very healthy. It's what most people want to say a 10% drop is a correction. And we've probably had some corrections in here of a 10%. But what this has done is gone sideways like this. It's allowed this 200-day moving average to catch up and to not let this kind of arc at too high a slope. So this is acting fairly healthy right now. When we go back to the S&P 500, although we wish we had put more weighting into this because of what we can see now, it's still quite a distance from this. And it's kind of like what I had to do is shift my bid from the one piece of land to another, as I just thought that's a better value right there. And that's kind of where I think we are strategically like right now. What do you think, Doug?
Yeah, I think that's true. And there's other rocks, other pieces that we would like to add to portfolios, but they're just not there yet. And maybe they're not trending sideways, they're trending down. And so we could buy those and hope they come back, or we could wait till they show a little bit more signs of life. And one of those areas and signs of life is like there's of US money, US investors' money, there's $10 trillion out there invested in US based stocks, in 401ks and IRAs. There's about $3 trillion invested overseas. And trillion is just an amazing thing. What have we spent? $6 trillion on COVID, and we got 3 million of US money invested overseas.
3 trillion.
Or 3 trillion. Yeah. Thank you. Yeah, 3 trillion. I mean, oh my goodness, that kind of puts things in perspective. But just like we're looking at the S&P or the Russell 2000, There's several other little sleeves or areas where a person can be invested in. And sometimes not being invested in anything is okay.
Yeah.
It's okay because you're waiting for the supply side to come back in and say, more money is going towards this bigger rock, or this little rock, it's getting some attention and it could get big. And that's where you want to slowly allocate money towards.
And I guess it's key to point out that the stock markets, basically all they are auctions.
Oh yeah.
Right,
Bidder, seller. I mean,
Yeah.
that's all that's going on.
And nobody knows the motive. Like, as I was trying to assess what I was trying to do last night, I didn't know the motive of somebody else. Like, I didn't know what their expectation was on that. The little piece of land I was trying to buy, I thought, like, if a sub developer comes in there, they've got deeper pockets, and so they would just
Right.
blow me out of the water. Well, that's what we don't know. Like, when there's a day that a particular stock drops, nobody really knows the true motive or who's selling it, other than the people that sold on that day. But what happens with stocks is somebody, say a large mutual fund wants a position in a stock, a position being they want to own some of that stock. If they just came out and showed you what they were going to do, all the little minnows would jump in front of it, right, and try to get on that. And so what a mutual fund or an institution like a hedge fund or somebody else might do is they may actually sell a stock hard, a lot of shares that they want to own. And that doesn't happen in this kind of auction over here, because what they know is that there are what they call weak hands out there. And if they can, if you picked a semiconductor stock that they wanted to own, and they're really positive on the 5G, but all the maybe the little minnows that got out there and bought semiconductor stocks, what they could do is come in and sell hard part of their position to get it to drop back down,
right,
and then turn around and start buying on that price.
They may have a 5-year plan on that stock.
Right.
And part of that plan is, let's take some now so we can buy it back cheaper.
So they may do that, which then makes it even more confusing for the individual investor that's not paying attention to what's going on. And so this auction that I just gave you an example of is just a one-sided. There's one seller, and they've said they're going to sell it.
Right.
And they didn't say why they're going to sell it. They just said it's going to sell today at the highest bidder. Well, you don't know with individual stocks when a seller maybe intends to buy more, but they're just trying to get the market to back off a little bit.
I think my favorite example of that is a dividend stock.
Yeah.
Because a dividend stock, you might have someone who wants income off their investment, while someone else might buy that dividend stock. This isn't a bond. They may buy that dividend stock because they really believe that company is going to grow and there are going to be profits from it. And so you could have two different aims for that one investment. And that's the same way it is for all of you. I mean, you might have a goal in mind where you want your money to do this or that. And it might be income oriented. It might be a goal, but nobody else knows what your motive is.
Well,
except hopefully us. and if I haven't done that, then I need to get with you.
Yeah, boy. Well, that is the markets are complicated, and at the same time, maybe not so much. The beauty of knowing that there are sellers out there, and they're not selling one time. They could sell multiple times because they could buy multiple times. You can't probably go buy farmland today, sell it tomorrow, and then have somebody freak out and buy it back from them.
Or borrow more to sell more.
Right.
That's where this kind of thing gets really intense.
Right. And that's part of like the psychology. When I was doing this yesterday, I was paying attention to which bidders were bidding, and they were shifting their bid and watching what they were doing. And I had just only made one shift. So if they were doing the same thing, they're like, I don't know what this crazy man's doing. And so there are ways that we look at things behind the scenes to see what the bids and the sellers are doing. And a lot of that has to do with the volume that's going on transaction. If there's, we've still got this screen.
Can you show an example of volume?
So all these pink and blue lines down here at the bottom of this chart are volume. How many shares traded, and this is the S&P index. So it tells you how many shares traded. Like this day right here, 3.2, is that billion? I don't even, I think that's 3.2 billion shares traded on that day. And that was the highest day in, looks like, maybe this might be the highest day right here. But somebody big is doing something substantial there. And they, if they're buying, if it's a big buyer, then that gives you an indication that somebody's got a lot of money to spend and they're confident right now. And these little ones don't maybe tell you as much otherwise, unless like you get this little red day here that's a sell, and it was done on 300 million shares maybe. That's a lot different than 3 billion. And so a down day with 300 million isn't really as significant. It's just the ordinary traffic of the market in that day.
One of the mutual funds I used to like to follow, they would basically track CEOs and CFOs and major shareholders to see what they were doing with their own shares of their company stock. And you could say, okay, well, this guy must be optimistic or this guy must be pessimistic on their stock. They're selling their shares. But again, you don't know someone's motives. They may be sending their kid to Yale and they needed some money to do it. And so who knows what somebody's motive is, but you can know yours and you can know your why of what you're doing. And you can know why you're in the Russell or the S&P. And that's really our goal, is to help you understand the why behind your investment.
And I think one of the things we do is we can scour through some of the data. You know, we've scoured through data during COVID and things like that to show you what really the data shows. Some of this software, I probably won't show you on this particular screen. It has a tab over here when we're looking at individual stocks, and it tells us, or do I say stonks? It tells us who are the major owners of that particular stock. And it also gives us, and those major owners are generally mutual funds.
Yeah.
And it gives us a running tally quarter by quarter, whether the number of mutual funds in that particular stock is increasing or decreasing. Well, that gives us a glimpse of their motive. If these people are spending millions and millions of dollars in research and by just droves of them are bailing from a particular mutual fund or a particular stock, then it suggests there might be something going on under the water level that we don't know about yet, and that we ought to pay particular attention before we're going to invest in that. And to your advantage as our friends and clients, if you have stocks that you aren't holding here at Gimbal and you want us to make an assessment of that and tell you what it really looks like right now with our opinion, we're happy to do that kind of assessment for you and help you think through what that might look like as you go forward, because stocks are just the same way. You know, these two little, you know, these people bidding on these two little rocks last night, they pushed the price of that up 50% more per molecule than on this. And I just said, I'm out, dudes.
Well, and we could, you know, we can give you an opinion, but really more importantly, we can give you data.
Yeah.
We have a supply of data that can help you with emotional decisions. And our opinion may be wrong,
Yeah.
but we can at least look at the data together and say, it's doing this right now.
And I you know, I think the world is too disclaimer conscious. I believe in caveat emptor, buyer, let the buyer beware. But the fact that we have an opinion, I think is a great benefit to you all, because I think our industry and even our back office is going away from having an opinion. Anything we can do just to be a grocery store commodity deliverer to you is what most people are doing today.
Right.
And I think what we bring along with our knowledge, our integrity, and our love for you is that we do have an opinion.
Yeah. Yeah. Someone was asking me about our opinion on a certain investment this week. And all I could do is just go back to the data and say, here's what we know about this investment. And the beauty of a stock is quarterly earnings come out and it says, here's what happened, but that's all in the past. And so you can use that stuff as a guide to the future, but we have the sources to the data and we can help you see what you own.
And we don't, again, none of our thoughts or our opinions are guaranteed, because there is no guarantee, and that's what makes life fun. But we will with you and give you strategies, particularly if you've got a large holding in a particular stock. You need to have a strategy to get out of there, because if you go back and study the year 2000, there were companies that were large companies like MCI, Enron, and a whole variety of things that their final destination was price zero. And one of the people we've entrusted a lot of brain time to is William O'Neill, and he says all stocks are speculative. And if you don't believe that, then you might get stuck in something and go, how'd I get here?
Yeah, I saw a stock open up over 40% down overnight this week. That's why you don't buy all your neighbors' ideas.
And we are out of time. And last week, Doug was giving me a hard time for ending on a downer.
Oh, yeah, sorry.
But you guys have a great weekend. Get out and enjoy it. We're supposed to have beautiful weather in central Indiana, and just make the most of your time. And know we're here if you need to call us for anything.
Thank you. Bye.
Bye.